everybody, it's Stacie Duffy here, your Denver Metro real estate resource with your May Denver Metro housing market update. I've got my stats pulled up for y'all, and pretty much it's a typical spring market, but tempered with the interest rates, right? We still have pretty consistently, we're picking up in the spring as we usually do, so that's very cyclical, I would say, and very typical for this time of year. As you can see, okay, we bottomed out in January, as I mentioned in all my market update videos. Those are December shoppers that close in January, and as you can see, we're picking up. So February closings were up to 555, and I'm talking median close price for the South Metro Denver Realtor Association data set. So that's a 7-county Denver Metro. So, and they've been up about 10K. Our median sales price has been up about 10K each month since then. And this is for all property types combined, whether it's condo, townhouse, single family, all that stuff put together. So we're picking up as we usually do in the spring, but see, that's pretty normal. We pick up in the spring. Last year, we kind of topped out a little early because the interest rate changes. Normally we go to kind of May or June. Keep in mind, June closings are May shoppers. So we're hitting that time of the market where the buyers are out, but graduations are going to start soon, vacations are going to start soon, and towards the end of May, things start to slow down a little bit. So just because you see these top peak prices in June, which is pretty normal, and I'm going to go back a little bit further so you can see that more often. So you can see we usually kind of peak out in May, June. Don't wait until June to list your house. You're going to kind of miss it, and you're going to be on the downswing of this because our escrow process is about 4 to 5, maybe 6 weeks sometimes, especially when sellers need to find a new place to go live. So given that, nothing too exciting as far as anything unexpected. So very typical spring market, right? However, one thing I wasn't expecting was for the inventory to kind of flatten out. And we had less new listings last month than I would have expected. So we had 4,900 listings in March. We only had about 4,500 in April. Usually that goes up pretty steady, January all the way through about May. I'm kind of surprised that tapered off. So this one, April to May, it kind of tapered off as well. But we're tapering off in April a little earlier than I would expect. So, and a lot of that is contributing to our supply issue, right? So you can see we kind of level off in the summer, April, but May, people get busy. This one did taper off again early. March, April, May, that's usually more what I see is our listings kind of increase from March, April, all the way up to May. So we took a little bit of a dip on listings, and that's cutting about 10%. So that's cutting into our inventory a little bit, which is why our months of supply kind of went back down a little bit. So you can see things are still selling really quickly. We're not even back to pre-COVID supply numbers here as far as months of supply. So a couple of things, as I mentioned in last month's video, that are contributing to that. The lock-in effect is what a lot of the realtors and the lenders are calling it, which is, hey, everybody's locked in their rate at 2, 2.5, 3, 3.5, 4, 4.5, 5%. So some 5% or below number. Therefore, there's got to be some major life changes and major motivation to incentivize them to go pay a much higher rate and move and buy something else and sell the place they have now. Either that or they're doing that and they have the discretionary funds to where they can keep that other property and rent it out. And because the rate is so low, sorry guys, I'm not used to having a mic here. Because that rate is so low, they're able to charge enough rent and make up for those costs. Which had they go buy something now and rent it out, you probably can't do that. A lot of investors are a little negative on their cash flow for anything they're buying right now. So that's what's part of that lock-in effect as far as people aren't wanting to sell their place because their rate is so good and because their monthly payment is so good compared to something else they could go buy now, given what the rates are right now. So that's contributing to that lock-in. I was expecting a few more listings coming on in April, and I'm starting to see that pick up a little bit in May, I think. I think May numbers we'll see because we're only about a week in. I think we're going to be flat to April, maybe a little bit more, hopefully. We'll see. There's not a ton of stuff out there. So for the percent of close to list price, you'll see we're right at 100%. I think that's going to tick up for May closings a little bit for everybody shopping right that shopped in April. They got under contract and it's going to close in May. because that's what I'm seeing out there with my buyers. That's what I'm seeing with most of my sellers is the 2, 3, 4 offers, right? Kind of like I mentioned the last couple of months. It's aggressive, it's competitive, but it's not the give away your firstborn child and buy them a week vacation in Bahamas or something like that. It's not nuts. I'm not seeing waived inspections. I'm seeing limited inspections of, hey, we'll look for the big stuff. But people aren't just saying, we won't even do one or we won't even ask you for anything. Nothing that crazy, which is good. I don't like to see those. I've talked about that many times before. So I think this might tick up just a little bit. I know these numbers kind of average out quite a bit, and that's for our median. Our average, let's see, I haven't even looked yet. I bet we're a little bit up. Yeah, there we go. 100.3. I think it'll maybe go up to like 101, 101.5. I don't think it'll be nuts. Maybe 103 tops. Just because I'm not seeing that much bidding over in a lot of our current market. It's usually $5, $10, $15, $20,000, somewhere in there. Which, don't get me wrong, that's a lot of money, but when your median price point is $575,000, it's still under that 5% mark by a pretty good margin. So overall, traffic is another thing I wanted to talk about. When I mean traffic, I mean showing activity and how many buyers are out looking. So we picked up for the spring and we've been pretty consistent ever since. There's not a whole lot more people jumping in. The people that jumped in come January, February. They're not waiting until March, April, May. So, and a lot of that, those are your dedicated buyers. Those are the people that are like, yeah, I'm going to pay 7%. Okay, I'm going to pay 6.5%. It is what it is. I'm tired of renting. I would like to go own something. Either that or, like I mentioned before, the major life changes of, hey, I've got to have something else. I'm not, what we have right now is not working for us. So that's really what's going on right now. If you have any questions about this, please feel free to leave them down below. I always get some different thoughts on my market update videos, which, hey, I'm always happy to take a look at them, and it's entertaining if nothing else. Another fun one is our days in MLS. You can see when I say the spring market picks up, there you go. So January, keep in mind, that's our December listings that we're getting under contract in January and things like that. And the market kind of dropped off a cliff, and this was that cliff it dropped off of last May. So anyway, yeah, everybody got back out there in January and February, and you see things that are in good condition, priced well, without major issues, are for the most part going in the first weekend. Average, that's a different number in here. So we're down, I'll say down to 28 days on average, but that's why the median is a much better picture, because that's more reflective of what's going on in the current market. Obviously, if we have a few listings that have been sitting around for 6, 9, 12 months because of everything going on last year, whether it's condition, whether it's price, whether it's just high-end properties, or actually our $2 to $3 million properties are moving really quickly, which is a little unusual. So that can impact the average numbers, which is why I like to look at median for a lot of different things. But that gives you an idea of, hey, things are moving pretty quick as long as they're in good condition, priced right. But our percent close to list price is not through the roof or anything nuts. So it's going, and there's good traffic, but it's not absolutely nuts like it has been in the past. But it's also still a pretty strong seller's market. For the next month or so, I expect us to level out come July market update, because that's going to be June numbers. I think we're going to top out there for the year. So, and it's not going to reflect what's going on in the market until probably August when the July numbers come out. So just kind of laying groundwork there, letting you know what I'm expecting to see, kind of what I'm seeing out there with my buyers. If you found this helpful, or you got a little nugget out of it, or you appreciate the information, please hit the like button down below. I would greatly appreciate it. If you are looking to buy or sell in the Denver metro area, I would be honored and for the opportunity for an interview. Sorry, I'm a little tongue-tied today, guys. And I appreciate the opportunity. Feel free to reach out to me. My contact information is down below and also on my website. So thank you again so much for the time. Hope to see y'all on next month's market update, and have a good one.